What were the lessons from the IFRS 9, which has come on board to bring more efficiency, capital adequacy ratio, and risk management in banks? What was the lesson for 2018 financial year, and what we're expecting in 2019 in that aspect?
I think the IFRS 9 adoption was a good move by CBN, just getting banks to clean up and restart. So it was for us a resetting of the book. And what we did was, because we had declared upfront where we were challenged in terms of the NPL, we took advantage and took the impairment charges. So those are one-off charges that were made. Going forward, IFRS 9 means you've got to book impairments on expected loss basis. What that means is you've got to look at the value that is at risk. Okay, look at the loan when there's a default. Even before it defaults, you have got to look at it. What is the collateral that you have that can mitigate loss? So the loss given default. So the lesson to learn from IFRS 9 is that you've got to be a lot more deliberate in the choice of loans and the sectors you lend into, because you're not going to wait until there's a default. Once you book, you test for impairment and you take the charge. So we want to have, again, a fortress balance sheet that is devoid of boom and bust, that is very resilient. And we want to also have earnings that are protected so that you do not earn so much and then lose it through provisioning. That is the commitment we have given. I believe we have people and we have the processes that are now institutionalized to guarantee that we deliver on the mandate we have been given by shareholders today.
IFRS 9 is a very important accounting standard that basically impacts the way banks and other financial institutions, the way we measure and value our risk asset. The key impact of IFRS 9 centers around the way impairment on loans and advances are recognized. The standard moved away from the old standard, which used to be based on incurred losses, to what we call the expected losses. So, but there was also the standard also allowed for a 1 year adjustment of the impact of this new standard to go through the equity line. So after then, the impact goes through the P&L. So we've taken what we needed to take in 2018. I think the market now fully appreciates the importance of IFRS 9, and First Bank being one of the leading financial institutions, we have a good understanding and we have a grasp of what to do. So for us, we are basically back to BAU as far as IFRS 9 is concerned.
I think the IFRS methodology is closer to business reality because it looks at the totality of cash flows and not just talking of if you're due to pay today or tomorrow, what's the cash flow that is coming through, what kind of collaterals do you have, and therefore defines an expected loss, which then defines the impairment. I think the industry has done well. To the best of my knowledge, all banks have adopted it. The regulators too have been very efficient in being dynamic to ensure that it does not damage the overall industry, and created a reconciliation mechanism between IFRS and NGAAP, which is called the Regulatory Risk Reserve. So in that manner, both schools of thought are well covered, and we're able to support businesses better. In 2019, I expect to see growth. Following the elections, I think the waiting period is nearing an end. The renewal of the mandate will happen this month, but then we can see early signs of renewed upbeat. Foreign direct investors are beginning to come back. The interest rate is more favorable to the productive sector. The exchange rate is stable, and the banking industry is focusing on supporting cash crop export, the creative industry, ways of creating employment, and making sure that the economy continues to realize its potential. So we look forward to a more positive 2019 relative to 2018, and in the medium term, a realization of all the various investment efforts, both by industry players as banks and the economy at large.